back to this Money Control live stream. You're watching Closing Bell with me, Nandita Khemka. Joining me is, of course, my colleague from the studios, Yatin Mota. Yatin, hi. Hope you're doing well. Fifth straight day of gains on the index today. Nothing really to complain in terms of price action. The Nifty, in fact, cleared the 25,000 mark as well today. Finally, one would say because it's the third attempt that the Nifty really made when it zoomed past that 25,000 mark. But today, being the fact that we ended above that crucial level as well. So let's see whether we can extend the gains to the sixth session as well. Tomorrow being the weekly FNO expiry, lots of volatility can be expected. But in terms of the market action, broader market action, the mid and small cap indices were also moving higher, but I mean, they were outperforming the market today as well. But no big outperformance on the index level, but lots of movers in the broader end of the markets. And of course, Yatin will be speaking about them at length. But in terms of sectors that were driving the gains today, hands down, it was the IT pack, leading from the front, 2.5% gain on the IT index. Most of the experts I spoke to were saying that for the market to fire up, IT is one pocket that really needs to fire up because banks have been underperforming today as well. We saw a fair bit of underperformance coming in on the banking index. In fact, ended the day in the red. Even the PSU bank index saw good gains yesterday, but today slipped into the red. Aside of that, you also continue to see big buying in FMCG basket. So yes, FMCG and IT, they were the flavor of the day today. Banks out of favor, and so were pharma stocks. Pharma hasn't been doing all that well since the start of the week. In terms of the breadth, it was skewed in favor of gainers today as well. And if you look at the Nifty movers, then let's take note of some of the big names. Infosys up 4%, TCS up 2.5%. You also had Nestle, HUL, these consumption names continuing to do well on the back of the GST rate rationalization boost. NTPC, Tech Mahindra, Tata Steel, Wipro, HCL Tech Grasin. Eternal, by the way, hit a record high today. That stock also in the green. We'll talk about some brokerage notes on Eternal as well, but doing well to hit fresh record highs. What's not doing well today were the likes of BEL, Bharat Electronics, starting the day on a positive note, but gave up those gains. In fact, top Nifty loser. Bajaj Financial Finance extending losses today. Tata Motors saw good gains. Yesterday, of course, slipped, into in profit booking today. And IndusInd Bank, ITC, Hindalco, Geo Financial, Trent, L&T, these were some of the names that didn't do all that well. But Yatin, even though broader markets were outperforming, but they clearly belong to some names like Ola Electric, for instance. That stock was up another
Yeah,
20% today.
absolutely. And the markets, despite being moderately higher, about 0.5%, we have the stock specific action in the mid cap space clearly showing up. As you're mentioning, Ola Electric, that stock zoomed to 20%, and we had the marquee interview on Money Control wherein Chandra Shrikant, one of our colleagues, interviewed the top Ola management, and Bhavish Agarwal, laid the roadmap as to how really does he see the momentum moving, especially on the sales volume front this festive season. Apart from that, we had Carbo under Universal, that stock moved 14%. Intellect, Aegis Logistics also were the other stocks wherein we saw almost a 6 to 9% kind of a gain. What was not doing well in the markets, especially in the FNO trade, was Aurobindo Pharma. That stock fell 4%. We'll talk about this stock in detail. Hyundai Motors witnessing some profit taking, like yesterday, was down 4% today. And Aditya Birla Retail as well as Cohance, one of the recent listings, also fell by nearly 4% each.
All right, those were the movers and shakers. But before I come to all the stocks that are on our radar, viewers, if financial freedom is your goal, then Super Pro is your superpower. That's the newly launched from the Money Control stable. Get live trading and investment ideas from SEBI registered experts, pre-identified chart patterns, and AI-powered stock alerts on WhatsApp, all in one. And right now, with our special financial freedom offer, get the annual plan for just 2,499 rupees, down from 7,499 rupees. So yes, that's a great discount. And of course, you can avail of that. Download the Money Control app and subscribe today itself. Well, then, on that note, coming to all the stocks that are on our radar, the big talking point today, of course, was the entire online gaming pack, the industry, so to say, given the fact that cabinet has, of course, given its nod to the online gaming bill that was also introduced in the Lok Sabha today. Of course, the cabinet nod on the online gaming bill comes with strict rules on money-based games. So we are looking at a blanket ban on money-based games. Of course, the bill aims to encourage esports, online social games, but of course, it prohibits harmful online money laundering gaming services. In fact, money gaming services, I would say, that encourage, according to the government, money laundering. So yes, ads and related financial transactions will also be prohibited. Of course, there will be a discussion in the parliament before it goes through. But of course, the proposals include that no person will be allowed to advertise online money games. Banks, financial institutions, in fact, cannot process payments for online money games as well. So there are some of the listed players that have some exposure to these kind of games. The likes of Nazara Tech, that stock saw a sharp cut today. I think it was down somewhere around 6% or thereabouts. Now it has somewhere around 46% stake in Moonshine or Poker Bazi, and it has an investment of 800 crore rupees, in Pukabazi. Moonshine Tech, revenue stood at 191 or almost 192 crore rupees in FY25. That accounts for 38% of the total revenue for Nazara Tech. But the management was on CNBC TV 18 today, and they said that there is no direct, exposure to real money gaming businesses, and no meaningful contribution to revenue EBITDA by the real money gaming business as well. But of course, they've also pointed out that the moonshine investment would be at risk if this ban is really implemented, and of course, the company will be doubling down on investments in their core gaming IP, and of course, there will be pathway for growth on that front. Now, they will of course be looking at acquisition targets as well. In fact, they could be looking at buyouts worth some around 500 to 700 crore rupees as well. In terms of what the street is really saying about Nazara Tech, they say that of course Pokerbazi investment for Nazara Tech will be at risk of being written off if the ban really goes through. Pokerbazi, of course, formed 35% of the target that PL Capital, is looking at on an SOTP basis. Right now, they have a target price of 13.45 rupees on the stock. But if Pokerbazi is excluded from their SOTP, some of the parts, value, that then it will come to somewhere around 917 rupees on the stock. Talking about Delta Corp, will that be impacted? Not that much, I think, which is why the stock really came off after a subdued start. The stock did recover quite a bit from the day's low. The company has already exited its online money gaming business in FY25 itself. They divested their stake in Delta Tech Gaming to Head Digital Works. Sold 51% stake for somewhere around 491 crore rupees or thereabouts. But Delta Corp continues to hold somewhere around 5.7% stake in Head Digital Works. But all in all, the industry feels that it is a death knell, given the fact that there are unlisted players, of course, the likes of Dream 11, Games 24/7, Winzo, Gamescraft, 99 Games, etc. That are now staring, or that would now be staring at existential crisis, because this entire industry at large also contributes quite a bit in terms of taxes and TDS to the government revenues as well, right? Somewhere around 22,000 crore rupees or thereabouts. And of course, it also generates a lot of jobs. So the industry feels that, of course, there will be an existential crisis. Of course, this will also lead to job losses as well. So yes, how that pans out, is something that the entire industry will now be watching out for. Yeah.
Absolutely, and the most gaming sector, be it on mobile global, which does the testing of the online gaming platforms, also was under pressure. So yes, the entire pack, including Nazara Technologies, especially, to do with the fact that the stock almost ended at the day's low, 13% lower for that one. But another stock which was under pressure was Aurobindo Pharma, and the reason here was that they are looking at a very big acquisition. According to the Economic Times, Aurobindo Pharma is very close to acquiring Zentiva, which is a European-based generic player, for a valuation of nearly $5.5 billion, probably translating into 40-50,000 crores. Obviously, Aurobindo had issued a clarification saying that the board explores such proposal and nothing has yet been finalized. So till then everything is speculative. However, if you look at the profile of Aurobindo Pharma, if it were to acquire Zentiva for a consideration of $5.5 billion, it would mean higher leverage, higher interest outflows, because the internal accruals of the company are not sufficient to fund this kind of a large transaction. In fact, if transaction is successful, this will be the largest M&A seen in the Indian pharmaceutical industry after probably Ranbaxy, which was acquired by Sun Pharma, and also we had Biocon, which had recently acquired Vitaris. Clearly, the pharma shares and the sector are in focus, especially Aurobindo Pharma, which has been a big underperformer in the NSE Pharma Index, down by nearly 8% for the month of August so far. So yes, stock pressure is building up, but how does it fund this entire transaction? How does it raise equity? How does it raise debt? Is something which is right now concerning to investors. Until the time probably the clarity comes, we could see a further stock reaction up or down depending on what comes out of this Zentiva acquisition.
Right, concerns over such a huge buyout, if at all it goes through, weighing in on stock prices, of course, with some company that has only 1,200 crore rupees cash on books. Of course, how would it fund such a huge deal? That was the major concern. And of course, as Yatin mentioned, the stock also hasn't really been in the pink of health lately. But of course, what's really been in the pink of health and of course has been in high demand, the likes of Eternal, that stock hit a fresh high today. Of course, there is a positive brokerage note as well from DAM Capital on both Eternal as well as Swiggy. Now, DAM Capital has initiated coverage on both these stocks with a buy rating. In fact, if you look at target prices, it expects somewhere around 25 to 30% of potential upside on both the counters here on. For Eternal, it has a target of 400 rupees, which implies a 26% upside potential if you look at yesterday's close price. And for Swiggy, it's a 30% upside potential, which target price placed at 515. Now, what is the rationale? Now, DAM Capital feels that the food businesses of both the companies have matured. In fact, it's also expecting very strong margin expansion for both the companies over the next 3 years. In fact, it expects the free cash flow to be also pretty strong in the same period, driven by lower capex and improved working capital efficiency as well. Now, the free cash flow that the companies are expected to generate, those that will be in fact enough for the companies to meet their funding when it comes to the quick commerce operation. At one point in time, there were concerns, given the stiff competition in the space, there were street concerns that the companies will burn a lot of cash when it comes to the quick commerce business. But of course, with availability of free cash flow on their books, Dan Capital feels that that would be enough to meet their funding requirements for this particular segment. In terms of profitability, well, Blinkit, according to DAM Capital, would reach EBITDA profitability by the fourth quarter of FY26. For Swiggy's Instamart, it expects EBITDA profitability by the fourth quarter of FY28. Now, in terms of projections, it expects a revenue growth of 42% for Eternal and 28% for Swiggy over FY25 to FY28. Now, it is also anticipating Swiggy to reach PAT profitability by FY28, which I already mentioned. But Eternal is already PAT profitable, as we've seen in the numbers. In terms of gross order value, DAM Capital expects both these companies GOV to increase somewhere between 18% to 20% for both the companies going forward, while EBITDA margin improvement is expected to fuel a compounded annual growth rate of 30% and 60% for Eternal and Swiggy respectively over the next 3 years. So that's a very positive view coming in on these quick commerce players or platform companies, so to say, both Swiggy and Eternal. And Eternal, of course, has been on a tear, extending gains from yesterday's session, and the stock, of course, hit a fresh record high in today's session as well. So, Yatin, that was about the platform companies. Any thoughts?
Yes, in your opening comments only you mentioned Zomato is at record levels, but Near term, we have the MSCI revision because of the changes that the company has made with respect to FII holding. So there could be a small chunk of shares which gets sold probably by the month end. But yes, Zomato or Eternal now rather and Swiggy clearly have surprised investors on the upside. And I think the new part here is not only they have increased the platform fees on food delivery because of the upcoming festive season, but I think their quick commerce business, which is a grocery delivery business, has been doing extremely well. And now the confidence of investors is that this business can be quite profitable and can be scaled up significantly over the next 2 to 3 years.
That's true. Yeah, the platform fee hike. Last time also I think it happened right before the festive season, and once it happens, I think it becomes a norm. They just try to cash in on the festive season, and then it becomes a new normal. That's what I think happened last time as well. But I think those were all the stocks that were on our radar this afternoon. That, of course, we've come to the end of closing well tomorrow. We have the weekly F expiry, and the weekend also becomes extremely crucial given the fact that we have the Fed's Jackson Hole speech, Fed chairperson's Jackson Hole speech on Friday. But that, of course, we'll be reacting to on Monday. But still, I think, and of course, I think tomorrow is that GOM, Group of Ministers meeting on the GST rate rationalization as well. Expect some clarity on that front as well. But with that completely timed out on this edition, before we say goodbye, I just want to point out to our viewers, if you really want financial freedom, if that is your goal, Super Pro is your superpower. Get live trading and investment ideas from SEBI registered experts, pre-identified chart patterns, and AI powered stock alerts on WhatsApp all in one. And right now, with our special financial freedom offer, get the annual plan for just 2,499 rupees, down from 7,499 rupees. So that's a great discount for you guys. Download the Money Control app today and subscribe today as well. Okay, well, with that, thank you for watching. We'll see you tomorrow with the markets at 9 a.m. Don't forget to